Welcome people. So today took a loss on US30 and it could have been avoided if I was more focused in the beginning of my session. But I'll show you the trade that I missed and why I entered this trade. Alright, replay mode to 8 o'clock. So 8 o'clock. 8 o'clock I identify a few supply zones as the market was trending downwards. This was the start of the day. It was a supply right here. One more right here. Previous day supply. And one above it. Also a previous day supply. So how do I know that these zone are supply zone? Show you in a bit. So first of all we need the clear trend. As you can see, overall market is going downwards. Next, you need a fair value gap. All these zones are fair value gap. So from this top one right here to right here, so all we need now is for market to go up and then give us a rejection. For this one, the gap is right here to right here. As you can see, market returned, but it never gave us a top. So this is a little gap that's left. For this one now, this one, the gap is also inside the zone, attached to the zone. So right here to right here. Market came back to right here, but it never gave us the top into the zone. Alright, let's play it out. So as you can see, market gave the top a good rejection and would enter on the break of candle. Before that though, also need the break of structure. So market gave us this low right here, which broke below all these previous low. So this low right here, it broke below and previous day low, as you can see. And next, we'd enter on the break of candle, which would be this candle that's playing out, it go below this candle. And SL above the highest point in the zone, that is if we are selling, and below the lowest point in the zone if we are buying. Well, I missed this trade, but would be aiming for a 1-to-1. As you can see, in 15 minutes would be out that trade. Alright, let's go on to the one that we actually took. So this was it right here. So market gave us a supply zone again. You have the fair value gap attached to the zone. That will be under this red, under this green candle to above this other green candle. So market came up partially. So all market needs to fill is this rest of gap. But before we tap the zone, we need break of structure. So market made this low. Market made this low right here. That went below this previous major low. But it also broke below all these minor lows in the middle right here. So That's kind of confirmation that the market wants to go lower. Let's play it out a little more. So we got the top, great rejection. So the next confirmation we need is a break of candle confirmation. That would be the next candle that is playing out would go below this candle, and that's where we would enter. Alright, so let's wait and see. So that didn't happen. So now we want the break of candle entry on this candle. So the next candle that is playing out, we want it to come below this one, this high one. So we'd get a even better entry and smaller SL. So we got that by a little bit. Yeah, so we'll enter right there and SL above the highest point if we are selling, and below the lowest point if we are buying. So we're aiming for a 1 to 2, a 1 to 1. Yeah, market almost hit TP with one candle, and then it just was consolidating a bit and reverse straight to my SL. But today is Friday, so I'm surely won't be forcing any more trades. I'll give you an update on the account right now. So this is where market is presently at. Yeah, so now for the update on the account. So still in drawdown 1%. So first trade was a loss, then this other loss. I shouldn't have taken that trade. It was on the 1 minute time frame. So I definitely learned my lesson from that. Then we recover with this win the same day. Yesterday we took a win and today we took a loss. But we could have won if we actually stayed focused. Yeah, so down 53 and 5 cents. Yeah, currently with 40% win rate. But if I stay more focused, I definitely can boost that up higher and actually pass this account. Yeah, so Monday again, gonna be on the charts again, more focus and getting ready to bag these pips.